Hi, my name is Diego Mendez. I'm a bankruptcy loan modification foreclosure lawyer here in beautiful South Florida, Miami, Florida. I've been talking about this subject of forbearances, loan modifications, partial claims, and different things involving the post-COVID financial nightmare that we're dealing with right now with the real estate. And I've helped a lot of people make decisions on how they can proceed with either the forbearance or the partial claim or the loan modification or different options that they have. I'm here to focus in on one thing. I'm getting a lot of questions about, should I take the loan modification? Should I take the partial claim? Loan modification, partial claim. Loan modification, partial claim. That seems to be what everybody's interested in. So I'm going to focus in on that today. My name is Diego Mendez. My channel is called Debt Law, Survival Guide for the Desperate Debtor. I very much appreciate if you subscribe to my channel and like my videos, because those subscriptions are really important to me as I'm building this channel. And obviously the likes help me make more of these videos because the algorithm for YouTube will put this video out there and more people will watch. So keep watching. I'm going to focus in on this question in about 5 seconds. So we're coming to the end of forbearances, and a lot of people are getting letters and phone calls from their banks specifically asking them what do they want to do now that the forbearance is over. What do they want to do with all that money that they owe them from the many months that they've been in forbearance. Now, the different options we've talked about in different videos: lump sum payment, partial claim, payment plan, and loan modification. That's basically the different options. Now, most people are not interested in the lump sum payment because they weren't able to save the money that they owe from the many months of forbearance, or the payment plans, which could make your monthly payment double than your normal payment because the payment plan is usually pretty short. So most people focus in on the two options that do not involve them coming up with a lot of money or really raising their payments. And those are the partial claim or the loan modification. Those two options are the only real options that you have if you don't have the money to pay back all the money that you owe them from the many months that you were in forbearance. So what's the difference? Now, the partial claim basically is what they do. The bank does it. They take all the money that you owe them. They put it in a lien at the end of the mortgage. So when you sell a refinance, you have to pay back that money, but you do that many months in the future or many years in the future. Your term does not change, nor does your payment. You basically come out of the forbearance exactly the way you came in. You just keep paying as if nothing happened, and you get on with your life. Now, the loan modification is a completely different thing. Loan modification basically is a brand new loan that the bank gives you with a different term, different interest rate, and a different payment. That's the difference basically between the loan modification and the partial claim. Now, there are other differences, but in practical terms, that's what you're dealing with. Loan modification, new term; partial claim, the same term; partial claim, same payment; loan modification, different payment. Now, with that said, this is not really a choice. They kind of make it look like a choice, but it's not really a choice. The reality is that when you're sitting there and you're saying, oh, well, maybe I do want a lower payment and I'll go for the loan modification. It's not like that. The partial claim is basically a no questions asked, sure thing. You get asked for the partial claim, you get the partial claim, and you get on with your life. Loan modification is an application. Even though it's easier now than ever before to get a loan modification because they've manipulated the rules in a way that makes it very favorable for people to get loan modifications, it's not a sure thing. It's an application, and you might end up with a payment that's not much lower than you had, but you have a new term that's many years longer than you had originally. So you end up paying a lot more interest. So the thing to really understand about loan modification, which is the most important thing, is only applying for loan modification if you truly cannot afford your old payment that you had before COVID. This is the only time it makes sense to apply for loan modification. It does not make sense to be applying for loan modification if it's just simply what you're trying to do is get a little bit of lower payment because you just feel like doing that. That doesn't make any sense. because you're putting yourself in a situation where you could get denied. And if you get denied, then it's not really clear what would happen in that situation, but it's possible that at that point you're defaulted and you're late because you haven't made payments in a very long time, and now you've been denied for your loan modification, and you are no longer, forbearance no longer applies to you or to anybody because forbearance are going away right now, and you're in a worse position than you were before. So be very careful. A loan modification is not like a refinancing. A refinancing is a choice. You go, you find a mortgage broker, you apply for a new loan, it's based on your credit, it's based on all these different things, and you get a new loan with a lower payment or whatever it is you're looking to do with your loan. Loan modification is not like that. Loan modification, basically, the purpose of loan modification is so that people can keep their homes. The purpose of the loan modification is not necessarily to lower your payment. In theory, you could get a very small reduction in your payment and get a loan modification, but you end up with a longer term. The purpose, the true purpose, and the classic purpose of loan modification is to take all the money that you owed and put it back into a new loan. Recapitalize the loan, is what it's called, and reformulate a new loan that takes all the money that you owe that you can't pay because of the situation that you're in, and bring it out over 40 years generally. That situation puts you, that new loan puts you in a situation where you're paying a lot more in interest over the 40 years than you would have been if you had just left your loan alone the way it was when you started. So again, my advice to people in these situations, obviously, it depends on a million other factors, but if all you're trying to do is get a lower payment because you just don't want to pay what you used to pay, and you think, well, this is kind of like a refinance, I'll get $100 off, whatever. Really think 3 or 4 times about that, because number one, loan modification, you get denied. Number two, there's no guarantee you're actually going to get much of a lower payment. Number three, you're going to get a brand new loan, and that loan is going to be a lot longer than you had originally. So if your goal is to pay off your mortgage, you're nowhere closer to doing that with a loan modification. So I hope that helped you make your decision when you're in the situation where the forbearance is coming to an end and you're having to make decisions based on the new situation that you're in after COVID. Again, my name is Diego Mendez. I'm a bankruptcy, loan modification, and foreclosure lawyer. I've been doing this for 13 years here in Miami, Florida. I hope that these videos help. Please subscribe and like my videos, and I'll keep making them for you and for everybody who's in the situation as we're moving out of COVID into a normal economy, and hopefully moving out of this nightmare so that people can move forward with their lives.